Magandang buhay, BI Arcadas. Welcome to the part 2 of Create Law. To discuss the implementation of the amendments introduced by the Republic Act No. 11535 or the Corporate Recovery and Tax Incentive for Enterprise Act to the National Internal Revenue Code of 1997 as amended relative to the final tax on certain passive income, we have here the Revenue Regulation 2-2021. RR 2-2021 imposes a tax of 20% on certain passive income received by non-resident aliens engaged in trade or business from all sources within the Philippines for income payments to a resident foreign corporation. 15% shall be imposed on any profit remitted by the Philippine branch of a foreign corporation to its head office abroad. 20% for interest on any currency bank deposit and yield or any other monetary benefit from deposit substitute and trust funds and similar arrangements and royalties derived from sources within the Philippines. 15% for interest income derived from the depository bank under expanded foreign currency deposit program. And 15% for capital gains on sale of shares of stock not traded in the stock exchange. Generally, income derived from all sources within the Philippines by non-resident foreign corporation, 25% shall be imposed effective January 1, 2021 onwards. Dividends received from domestic corporation is generally subject to 25% final withholding tax. However, a reduced rate of 15% shall be applied subject to the condition that the country in which the non-resident foreign corporation is domiciled shall allow a credit against the tax due from the said non-resident foreign corporation, which are equivalent to taxes deemed to have been paid in the Philippines equal to 10% effective January 1, 2021, which represents the difference between the regular income tax rate for non-resident foreign corporation under Section 28B1 of the NARC as amended, and 15% tax on the dividends as herein provided, or does not impose any income tax on dividends received from a domestic corporation. Also, capital gains from sale of shares of stock not traded in the stock exchange is subject to 15%. Government money payments shall be subject to 1% withholding tax starting July 1, 2020 until June 30, 2023. When higher rate is used by withholding agent, such may be claimed as tax refund if withheld taxes have already been remitted. Let's now move on to Revenue Regulation 4-2021, which implements new items of VAT exemptions and temporary reduction of percentage tax rate under the RA 11535 or the CREATE Act. We have the three transactions that may be treated as VAT exempt. First, the sale, importation, publication of digital or electronic format of books, any newspapers, magazines, journal, review bulletin, and educational reading materials covered by UNESCO agreement on the importation of educational, scientific, and cultural materials. To warrant VAT exemptions, the following requisites must be present. First, the materials enumerated herein are not devoted principally to the publication of paid advertisements. Second, the materials enumerated herein are compliant with the requirements set forth by the National Book Development Act. The VAT exemption is effective on April 11, 2020. Next, we have the VAT exemption on sale or importation of prescribed drugs and medicine for diabetes, high cholesterol, hypertension, effective January 1, 2020 onwards, and for cancer, mental illness, tuberculosis, and kidney diseases effective January 1, 2021 onwards. To warrant VAT exemptions, the drugs and medicines should be included in the list of approved drugs and medicines issued by the Department of Health. Finally, we have VAT exemptions on sale or importation of capital equipment, spare parts, and raw materials for the production of personal protective equipment, components, vaccines, medical services, and FDA-approved drugs used in clinical trials, included raw materials directly necessary for the production of such drugs effective on January 1, 2021 to December 2022. To warrant VAT exemptions, the DTI shall certify that such equipment, spare parts, and raw materials for importation are not locally available or insufficient in quality or not in accordance with the quality or specification required. Also, a copy of license to operate issued by the DOH FDA to the manufacturer buyer authorizing the manufacture of PPE components and drug for COVID-19 treatment and sworn declaration that the items will be used for the same. The exemption claim shall be subject to post-audit. Take note that the sale or importation of capital equipment, spare parts, and raw materials for the production of personal protective equipment components is VAT exempt. Thus, sale or importation of finished PPEs is subject to VAT, unless they are also VAT exempt pursuant to the other provision of the tax code. All persons, whether corporations or individuals, who are subject to percentage tax for not exceeding the VAT threshold of 3 million pesos shall be covered by the reduced percentage tax rate of 1% effective July 1, 2020 until June 30, 2023. Exemptions are cooperatives and self-employed individuals and professionals availing of the 8% income tax rate who are exempt from percentage tax. And that concludes our discussion on Create Law. Don't forget to follow us on Facebook and subscribe to our YouTube channel. Please leave a thumbs up if you like our video. Thank you.